Thanks for joining me today. I'm on the road and I'm talking to you while I'm on the road. And what I'm going to be talking to you about is 3 things that the smart money is doing. We're in February 2024. And I want to share with you what I'm encouraging my clients to do and what you should be doing as well and why you should be doing that. First thing that the smart money is doing this February is topping up their tax-free investments. Now, tax-free investments are low-hanging fruits of investment. Why we like it is because we don't get charged any taxes, any interest, any dividends tax when it comes to the profits that are made within these investments. The downside of tax-free investments is that we have a maximum contribution of 3,000 rands per month, the second maximum contribution of 36,000 rands per year, and a lifetime maximum of 500,000 rands per lifetime per South African. I would like to see the finance minister raise this. So if you have any pull with the finance ministry, tell him, hey, it's been a long time since he increased the lifetime. I think the lifetime of 500,000 has never been increased. Needs to be increased. Inflation is horrific. Where considering that tax-free investments were first launched in 2015, so 500,000 is not much. So we need to lift on that camp. The second thing you need to know about tax-free investments, anybody can have one. All right, kids can have them, adults can have them. Any South African with an ID number can invest for them. So if you're an aunt or uncle, you have nieces, nephews, and grandkids, this is something that you need to get for them. Even if you're not making maximum contributions, something small can really grow and compound into something amazing when these kids are older. Next thing you got to know about tax-free investments is you don't want to only be in the bank. Now, different financial services providers give you the option to invest tax-free. The banks, they usually give you the option to be in an interest-bearing account, and that's not where you want to be. You want to be offshore equities to get some good returns, because your tax-free investment should be your long-term investment. It's not where you should be holding your emergency fund or any sort of short-term savings like for a car or a house or something like that. Right, so that's the first thing that the smart money is doing this February, is topping up their tax-free investments. The second thing that the smart money is doing is topping up their retirement annuities. Now, in South Africa, every South African has an opportunity to contribute 27.5% of their annual income, gross annual income, into pension and retirement products. So this could be a combination of pension, provident, or retirement annuity. So as somebody who's contributing to a pension or provident at work, you need to know what your contribution is. All right, how many percent you're contributing, how many percent your employer is contributing, if they're contributing. And that difference, if the total contribution from you and your employer is 10% into a pension, then you know that you have about, 17.5% to play with when it comes to your retirement annuity. All right, so know these numbers, know these figures. You'll find them in your pay slip, but even in you can get a pension fund statement from your administrator at work. So know what these numbers are so you can maximize these. Why we like retirement annuities? Although the growth in there is tax-free, it's not a tax-free product, it's a tax-deferred product. So you will be taxed at your point of retirement, and you will be taxed post-retirement as well, because you're going to have to buy an annuity on that product later on for retirement years. The other downside is Regulation 28, which is very much a pain. Now, the main clause of Regulation 28 that causes us so much of a pain is that 45%, not more than 45% of your retirement savings can be offshore, which is a pain. Last year, the minister increased it to a maximum of 45. And if he's going to show us some love this year as well, he would increase that to 50. I doubt he's going to do it. Maybe he's going to pull back on that 45%. So now is the time where you want to capitalize. Why we want offshore growth? Mainly because South Africa is not growing. Remember, about 20 years ago, there were about 700 some odd companies listed on the JSE. It's now down to just around 300, or probably less than 300 or so. Okay, so less and less options for pension funds to invest in. And it's offshore that's giving us the high risk, high volatility, but as well as high returns in the long term. So we always want to maximize at 45% offshore. Remember that the content of this video is not financial advice. It's general information. If you want custom advice, and I would love to chat to you one-on-one. Promise not to be in the car when I'm doing it. All right, so I'll click the link where you're watching this video. We can talk more about your retirement, how you need to be structuring it for maximum growth. Again, the last thing that the smart money is doing is making contributions to organizations, non-profit organizations that issue an 18A certificate. All natural taxpayers in South Africa, and I'm pretty sure this qualifies for business as well, but remember, I don't do tax advice. Everybody is allowed to make a maximum of 10%. Well, you can donate as much as you want, but the maximum tax deduction you have is on 10% of your gross income. So if you're earning $1 million, you have the ability to make a donation of 100,000 to an organization that issues you with this 18A certificate. All right, that means you won't be taxed on your full R1 million salary. You'll be taxed on 900,000. Then you add on that contribution, or your 27.5% contribution. Obviously, you know that your employer's contribution, that's taxed as a fringe benefit, but your portion and your private retirement contribution, that is also tax deductible. Okay, so you can really lower the amount of taxes you pay. The challenge that I have, and what I encourage my clients to do, is move away from that monthly thinking, monthly income. You got to shift towards an annual thinking when it comes to building your wealth. All right. Now, because you have that tax deduction, don't just go looking for an organization that issues you with an 18A. It's always nice to give, not a need in South Africa. But if you do find an organization that doesn't issue that 18A and that cause is special to your heart, don't feel obligated to only look for an 18A or issuing organization. Give where you feel is necessary. All right, so those are the 3 moves that the smart money is making. I hope you take full advantage of the various leeways that we have when it comes to our ability to reduce our taxes. Remember, the deadlines for all of this is the last day of February. If you're kind of mind, my deadline is the 20th because it's a massive influx this month. This is the busiest month of the year for us because everybody wants to top up. A lot of the organizations, financial services providers have given us their deadlines usually around the 20th or the 25th. But there's such an influx of business during this time. My deadline is the 20th of February because we got to go through everything. Remember, compliance is a big mission in South Africa. So we got to make sure that we are compliant to government regulations and hand over everything to a financial services provider and make sure you're all set for this financial year. And then we do the same thing all over again in the coming 2024, 2025 financial year. So if you need help with your tax-free investments, if you need your retirement annuity reviewed, how to maximize, how to get better returns, how to keep your fees low, and overall general calculations when it comes to your 27.5%, please feel free to reach out. Click the link where you're watching this video, book a one-on-one with me, and we can chat. If you want to know what you need to be doing to build wealth, click this video over here.